Welcome to the Bullington Capital Report, hosted by Bill Bullington. For the next hour, you'll receive information on current market conditions and trends that could affect your financial future. If you have a question for Bill, you can participate in today's program by calling 216-901-0945. That's 216-901-0WHK. You can also reach Bill by going to his website, bullingtoncapital.com. So without any additional delay, here's the host of today's program, Bill Bullington.
And we're back. And I'm sorry to report that my computer is down. So this is going to be interesting. I normally rely pretty heavily on that to do the radio program, but that's okay. You can always call us 216-901-0945 if you have any questions today. We're going to be talking a little bit about how to make sure you don't run out of money during retirement, and how do you know if you've saved enough money to be able to retire? What can you do to, or actually what kinds of things can you expect in a guaranteed type of investment, something that's got government guarantees? And we're also going to answer questions. Now, if I can get my computer working sometime during the show, we'll try to pull up a couple stocks. It's been pretty interesting, the activity that's been going on in the stock market. It's a relatively narrow group of stocks that have been leading the overall market. And I'm still waiting for some participation to come in some other areas, and it looks like it might start to pick up here. Mainly because the economy is actually doing much better than people thought it was going to. And jobless rate just hit an all-time low, which is kind of interesting. You don't hear a lot of this stuff. I mean, it's being reported, but it's not the headlines on most of your financial publications. And anyway, we do have a seminar coming up, and unfortunately, since I can't pull it up on my computer, and I didn't memorize the date, I'm hoping that I'm going to be able to get this done. It looks like it's coming up now, so that's good. But anyway, you can go to my website, bullingtoncapital.com. Pay attention to that over the next few weeks. Not next week, but in fact, I'll keep you updated on it, because we're going to be making some slight changes. The number one issue when people are doing polls now, we subscribe to a lot of different marketing companies' research just to kind of find out what the general public has on their mind, what are they concerned about, and one of them is having enough money to retire and not running out of money during retirement. I get it. When you're relatively young, you tend not to think about that. And I was kind of surprised that the younger demographics were also concerned about that. So that's pretty interesting, because it's not common. There's a shift in the overall thinking of the general population. And it's a good thing. They should be thinking about it, because, it takes an awful lot of money to be able to live off of your investments. It just takes a lot of money. You can do it. That's the good news. We live in America. So if you don't wait too late, if you have a couple of ideas firmly planned in your mind, like how much it takes to be able to do that, and we've got I'm just talking in circles here, but that's actually what the seminar is about. I call it the 10-minute retirement plan. It really doesn't take that long to figure out what you need to be able to retire, especially if you have a little bit of guidance. So we're going to talk about how to do that quickly. I'm going to show you some examples of how you can do that. We've got a new service that we've been rolling out slowly because it'll do a whole lot more than just the retirement plan. In fact, it is a comprehensive financial portal where you can go look up all your stuff. You can see how everything is doing. And I got to tell you, it's pretty addictive. I really think it's super addictive to when you start using this tool that we'll be showing you at the next seminar. By the way, that seminar is September 14th, and it's going to start. That's a Thursday evening. We're going to start at 6:30. We're going to run for. I always do a pre-seminar seminar. It's only going to be about 30 minutes, and that's actually Stock Picking 101. I know I put it on the second position on my website, but that's actually what we're going to start with is Stock Picking 101. And that also can be relatively simple. It can be as complicated as you'd like it to be, as you'd like to make it, but it's not necessary. The things that you need to know about stocks to be a successful stock picker are really not that many. In fact, I'm going to bring a little booklet with me that I've made succinctly. I don't know if any of you remember that I wrote this little book called Look Out for the Bull. And it was about basically stock picking 101. I hate to call it a book because it was more like a booklet. If it took you more than an hour to read it, it's because you were being distracted from something. And realistically, that hasn't changed all that much over the years. Stocks move a lot faster than they have before, which I think is really fascinating. That throws a whole dynamic into place in both directions, incidentally. They go up faster, they go down faster. So, but there are certain things that they have in common. So we'll be talking about that for the first 30 minutes. What are those things that they have in common? What are those things that companies that tend to grow and whose share prices tend to do very well over time, what are those things that they have in common? As anybody can recognize that, especially today with all the resources available on the internet for free. Fidelity is one of my custodians, one of the custodians that I use with clients, and they've got more research than you are ever going to need. So you hear about a company and you want to go do some research, and you have an account at Fidelity, which incidentally, there are no minimums on. The Fidelity does not have a minimum for the amount of money you have in a brokerage account. Fees are extremely low. Most of the time, they don't have any fees. And there are a lot of commission-free exchange-traded funds now that you can invest in. And you're getting the best of both worlds. You don't have to meet a $2,500 minimum the way most mutual funds are. You could invest with just a couple bucks and pay no commission on it. It's a wonderful world. I got to tell you. But having said that, you get on their website and you'll get lost pretty quickly if you don't know where you're going. So we're going to, we'll talk about those things. I'll even show you on Fidelity's website, if you're looking at researching a stock, they've got everything you need right there. And it's, for people that have an account, it's free. You can set up a trial account there too to get used to it. I think at some point in time you do have to open an account. Anyway, so Stock Picking 101, we're going to start 6:30. That's September 14th. It's Thursday evening, Corporate College on the east side of Cleveland. Go to my website, bullingtoncapital.com. There's a little map there. When you register and sign up for it, it'll show you right where it is if you're not familiar with it. We'll also be talking about the 10-minute retirement plan. It actually takes me about 2 minutes to do a retirement plan. Okay. And actually, I'm being facetious. It's about 30 seconds. Okay. Because I've done this for an extremely long time period. I've done this for, it's hard to believe it's going on 30 years. That is amazing. Wow. That just dawned on me. That is too funny. Anyway, so it shouldn't take you too long because it's just not that hard. Okay. Making sure you have enough money, to go through retirement, that's kind of a key. And incidentally, all this stuff is based on averages and probabilities. Averages and probabilities. We're trying to. I basically like to plan for the worst and hope for the best. That's kind of how I like to do things. But you don't always have control, so planning for a below average outcome, and if you have an average outcome, you're ahead of the game. If you have an above average outcome, then you're really ahead of the game. So that's what we want to do. But you have to have a pretty good idea of what those numbers are. In fact, I'll go through a couple of them right now. You need to have an idea of how much it takes for you to live on. That's not easy to do for some people. For some people, it's not easy. That's why we're offering this tool to all my clients. Anybody that's got an account at Bullington Capital gets to go online and track your spending. So if you don't know what you're spending, that's a good place to start. Track your spending. You sign up, you put your accounts up on this website, and it'll track your spending for you. I only keep enough cash in my pocket to handle tips. That's what I keep cash on hand for. If I go into a restaurant or I have to park my car someplace, I just carry enough cash to handle tips. Everything else, just use a card for because it's then recorded and uploaded to this website. The security on the website, by the way, is the highest level you can get. The company that we're using is owned by Fidelity Investments, so Fidelity is goes to great lengths to keep all their data secure. If you'd like to learn more about that, please feel free to email us, Bill@Bullington Capital, or just go to my website and click on the contact form there, click on the word contact. It's a link. It'll bring you to a page. You can fill out your name, your email address, and send us a message, and we will be glad to answer those questions for you. But anyway, that's where you start. How much do you think you could live on? How much do you think you need to live on? Once you've got that number down, and it's an estimate, by the way, and I understand it's going to change. And for those people that are interested in becoming clients, it's one of the first things that we talk about. If you want to do a retirement plan, how much do you actually need to live on? And if you don't know, we can sign you up for this service. There's a small cost if you're not a customer. If you are or a client, rather, if you are a client, then it's included. So how much you're spending now, just a basic budget. Once you've got an idea of how much you need, it's kind of easy to figure out how much you're going to have to accumulate. You then go over to whatever your sources of income are, what they're going to be. Social Security, do you have a pension? Do you have rental income property? Do you have a business that you might sell? Whatever those assets are. We're going to add them all up, and we're going to add up the income that you've got coming from places like Social Security and pensions. And then we can come up with a pretty good estimate of what kind of lifestyle that you can actually afford. And hopefully the two meet together. The lifestyle that you're leading and the lifestyle that you can afford in retirement, we're hoping. And if not, it'll be fairly clear. And then we've got decisions to make. Maybe you want to work a little longer. Maybe you want to postpone taking Social Security because it builds up roughly about 8% a year for the time that you don't take it. You have your options. And so that's what we want to look at. What are the options? What am I doing now, and what are my options? How do I reach those goals? And it's fairly simple. I mean, that's just about it. If you're a long way from retirement, then how much are you saving? And I'm going to tell you that you're probably going to have to save somewhere between 10 and 15% of your pre-tax income. A 401k plan is a great way to do that. But that's what younger people need to do. Somewhere between 10 and 15%, depending on how old you are, and also what kind of a risk taker you are. So, still not that complicated, though. I mean, it's just not that complicated. An average balanced fund's the long-term returns on it are somewhere around 6 or 7% a year, which is a lot better than a short-term CD is right now, and it's a lot better than most fixed or guaranteed products are going to be able to pay right now because they don't pay a whole lot of money. And it gives you a really good idea then if you take those numbers and it takes about 10 or 15 seconds for the software to do the calculation. And I may be overstating that. It's probably quicker than that. And that tool that I use, everybody's going to have access to now. At the seminar, I'm going to show you the exact tool that I'm using for this to do the 10-minute retirement plan. It's just not that hard. And everybody's making it seem, you got to do this. No, you don't. People that are telling you that stuff and making it really complicated and really hard, A, either don't know what they're doing, or B, they don't want you to know what they're doing. One of the two. Because I'm telling you, it's just not that difficult. So, if you got a phone call, question, or comment, by the way, I think we're going to have to take a commercial break here shortly. But the phone call, question, or comment, 216-901-0945, 216-901-0945. And again, you can sign up for that workshop right on my website, bullingtoncapital.com. You can call us too. If you want to set up a meeting on the phone or in person, feel free. It's what we do all day. I eat, sleep, drink, and breathe this stuff. So it's a good thing I like it because I would get really sick of it if I didn't. And anyway, so when we come back from the commercial from the commercials, which again should be starting in a couple seconds here. But we're going to talk about keeping enough money in short-term savings to fund your retirement withdrawals. What does that look like? So stay tuned. You're listening to Bill Bullington right here on 1420. I'll be back after these messages. And we're back. So, hey, I just got an email. You can always email me, bill@bullingtoncapital.com, too. And someone's asking, we're making a little bit of some changes, some alterations. We've added a model that is a result of the Department of Labor's rules for fiduciary standards. And they're trying to get us, actually, they're not trying, they are doing. They want us to run the money more like big pension funds run their money. Like the big multi-billion-dollar pension funds, they really want people who manage IRAs to run the money very similarly. And I'm not disappointed by that, incidentally. I think it's probably a good thing overall, particularly with the tools that have been created in the past 7 or 8 years. Over the past 7 or 8 years, a number of products have come out into the marketplace that really puts you on a much more equal footing to the big institutions than they ever have in the past. So I think this is something that we would have migrated to on our own. We were already thinking about it, and the Department of Labor rule just kind of sped that whole process up a little bit. And I think it's going to be a really good thing. And essentially what they want you to do is to invest in all the available asset classes. There's some general asset classes, large cap, mid cap, small cap, international, emerging market, bonds, various bond categories. And I think it's a good idea. I really do. And we're trying to incorporate that. We're going through the list. We're actually, we've sent out mailings. We'll be making changes to the portfolios. This is a really good time, incidentally, to be making changes because generally July, August, it's not even the first part of September, there's typically not a whole lot of activity in the stock market. September, incidentally, is typically one of the historically anyway, has been the lowest performing month. A lot of people think it's October because there were two big crashes that occurred in October. Yeah, it's actually September. So go figure. August is just barely behind that, incidentally. So anyway, over the next few weeks, you'll start to see some changes. We're going to increase the number of asset classes that we're holding. I will be talking about that at the seminar as well. That's part of the 10-minute retirement plan. So that's kind of a base strategy. It'll make up the vast majority of the stock portions of the accounts going forward. I'm still going to use my high dividend model. I'm still going to use my momentum models. I'm just not going to use them for as large of a percentage as I have in the past. So, and I think it's going to be very, very beneficial. One of the things, and again, we're going to be talking about this during the 10-minute retirement plan. One of the things I find very beneficial from the developments in financial services in general, particularly the exchange-traded fund space, is that they've built products now that allow you to achieve a much, much better level of diversification. A much better level of diversification. Now, you have to read a lot. You have to know what they're talking about because in addition to these good products, there have been probably 4 or 5 products that have been created that in my mind are actually just, they're going to underperform. They're not going to do as well as these will, especially when you start factoring in the amount of risk you're taking and the ability to build a very well-rounded portfolio has never been quite as good as it is right now. And the big institutions have had access to this kind of stuff for decades. Well, now it's working its way down into the smaller arenas, I guess I should say. And if you know what to look for, I think it's it's going to be very helpful. So this Department of Labor rule just actually they got lucky. They roll this out at a time when the tools are there, they're available now. They've got enough of a track record behind them to be able to put together portfolios that are on a risk-adjusted basis. They're really, really hard to beat, extremely difficult to beat. So, and that's, again, we will be talking about that. We call it our DOL model, our Department of Labor model. because they pushed it so quickly and so hard that I went to get an accreditation. I'm now an accredited investment fiduciary. It's AIF. Are the numbers. I'm sorry, our letters. This is funny. Somebody's trying to call me. Shh. Got to put my phone on silent. Hate when people do that. Oh, well. So that we're going to be talking about at that workshop as well. I think it's a really good time. You look at the international emerging markets, which we really didn't have a lot of exposure to in the past. They're doing very well this year. Their economies are starting to pick up speed. Their valuations are lower than ours are. Their growth rates are faster than ours are. So I think this is a very good time to be doing this. Very good time, especially during the summer because it's pretty slow. You don't see a lot of movement typically up or down. In most summers, it's pretty volatile. You get a whole bunch of up and downward, sideways, choppy motion, but not much progress. So I think it's a really good time to be visiting this, revisiting your own plans. Do you have a plan? If you don't have a plan, you'll be able to walk out of that meeting and you'll know how to do one. I'm telling you, it's not that difficult. It's actually very simple. So, and if you come out of there and you still can't do it, call me up. I can walk you through the process relatively quickly. And that's why I called it the 10-minute retirement plan. If you have the data already gathered, and which I'll tell you what it is, you just need to have an estimate of what your income is. Social Security, if you don't know what your Social Security payments might be, go to socialsecurity.gov. They'll send it out to you. It's free. Okay. If you have a pension, if you belong to PERS or STRS, get a statement of those benefits. Get an estimate of what your benefits are. It's free. They send it right to you. Yeah. So if you have real estate, figure out how much money you made. Look at your tax returns. Okay. If you've got investment properties like that, just look at your tax returns. You can come up with an estimate of what kind of income, and you might not want it then. You might want to sell that property and just invest it and then use that to supplement your income. So that's basically it. You've got to have what sources of income you need and whatever assets you might have. Think about what I just said. Two things. You only need two things to figure out where you should be or where you can be for retirement. So that 10-minute retirement plan, you're probably going to spend 9 minutes and 30 seconds trying to gather the data. And 30 seconds is what it takes me to tell you what the outcome is probably going to be. So, again, you can sign up for that workshop, and we are going to be doing the Stock Picking 101 because that's fun. And I really believe that everybody ought to have a small account that you manage yourself just to get a feel for what it's like to manage the money. I really think you should do that. And it can be fun. It's a hobby that can make you money. Most hobbies are very expensive. They cost you a lot of money. But this is a hobby that can actually make you money. And done under the right, methodologies, those that you feel comfortable with, it can be profitable. And you get to see what it's like to be a portfolio manager. You're actually just like those guys are. You're doing the same things they do. So you get to see what that's like, get to feel it, get to experience it. A lot of people think it's a lot like work, and they're right. There's a lot of work to it. But the bottom line is that if you enjoy the work, if over time you do it correctly, you should be profitable. Maybe really profitable, you never know. And I think it's fun. And it's really something that you should start probably teaching your kids right around the age of 12. Because by the time they're 12 years old, they've already had all the math that they're going to need to know in school to do this. You don't need calculus. You don't need trigonometry. You don't need geometry. You need to know percentages. That's all you need to know. And I'll show you what that is at that workshop. When you get it, most people are like, oh, that's what it is. The same reaction I had. I was like, oh, man. I would not have finished college had somebody shown me this. I'd have gone to do whatever it was I'd like to do. I would have been able to save the money, retire in the lifestyle I want. Man, talk about quality of life. Unfortunately, I was in my early 30s before somebody showed me all this stuff, and I had a lot of obligations. And by the way, I minored in finance and majored in economics, and this was not talked about in any of those courses, none of them. And so it kind of blew my mind, actually. So anyway, get to the workshop or call us. If you want to come in. Like I said, I love to get out of the office. I love to meet people. I've got a staff there that runs things when I'm not there. We talk every day. In fact, one of them emailed me during the show. There's a good group of us there. We're very quick. We're very efficient. It's fun. I love talking about this with people, trying to help them build those plans, get that confidence up that they need. Because nothing's worse than being fearful. That is just, I don't even like talking about it, actually. Because so many people are, and it can lead to such bad decisions. If your decisions are not made out of fear, how much better are they? How much better are decisions that are made out of practicality and reality and probability than fear? It's a beautiful thing. So anyway, I did want to talk today too a little bit about keeping enough money. Let's say you're already at that retirement age and you're thinking about drawing money now from your investments to supplement your income, whatever sources of income you have. What is the best way of doing that? Well, actually, that's a trick question because there is no best way. There are some ways that are better than others, but there's generally no best way of doing it. I'm going to give you a couple of ideas that you can use, that we use quite often. And the first one is to put up enough money into short-term government-type securities, maybe mortgage-backed securities that have short duration. I'll explain that later. But basically, safer stuff to cover 4 to 5 years' worth of withdrawals. So that way, if you get another big correction like 2008, 2009, it has a chance to recover before you have to start pulling money out of the stocks and locking in those losses. Now, I'm going to come back to that in a second because I have to take a quick phone call. And I've got JR on the line. JR, how you doing?
Good morning, Professor Bullington.
Hello.
I have a question for you. As you probably have noticed or may have noticed, applied optoelectronics really took a good whooping this week.
Yep.
It's been up as much as 600% from where it started at the beginning of the year. It took about a 30% hit earlier this week. Obviously, there's a heavy selling at this point, but I'm wondering, how does one determine the support level on a stock? I've heard that term mentioned many times.
Yeah, it's actually relatively subjective. The support level, though, if you look at a classic support level, you would go right back into June when it was right around $58 or so. If you look at that, and if you look at a Donkian channel that's over the last month, okay, that is actually, it's right at about $59.
Okay, so fairly close to where it's at currently.
Yeah, it's at 64 now. And I was watching that on Friday, and I was wondering about you because I know that you had been, I don't know if you're in and out of that. I had owned the stock. I'm not even, it may be still in one of the models that I run, but it will absolutely get ejected the next month because it won't qualify anymore.
Well, I've been in and out of it several times. I've made my money, and fortunately I was sitting by the sidelines when I took that hit. But what I'm wondering, Bill, is if it might be worthwhile considering after the dust settles to get back into it. And
well, if it comes back up on the scan, I would wait for that, though.
You would wait. Okay,
yeah. Well, yeah, I'd wait until it comes back up on one of your scans, because right now the momentum is negative. Okay. Very, very, very. That's incredibly difficult. Incredibly difficult. That's kind of like.
I was going to say it's negative. It was negative then. It's probably somewhat neutral now. But I mean, if you see it going down, obviously you don't want to go into it. But if you'd place a buy order, maybe 5% below where it is now.
No, you're guessing. You're just guessing. There's no methodology there.
You're right, undoubtedly. You're right.
I hate guessing. My luck is not very good.
Yeah.
I follow a
so.
strict set of rules, and those rules, I call them rules for a reason. Because that's what they are. They're rules, and you have to have that, and you have to expect things like this too. This is going to happen no matter what you're doing, and that's one of the reasons that you carry big baskets of stocks. If you're doing what I do in I run about $1 million this way. It's a small amount of money to be running this way, but AAOI has been in and out of that portfolio. And by the way, the last time I got stopped out of it, it did not make it back in. So, and I would have been in the same place. Well, actually, I've been in the same place, just about the same place it is right now, except that I just have been out and in cash for the past 8 weeks, and so I just got to miss that. It was an exciting run up, and the drop was much more exciting. So I got to miss all that excitement.
Well, the way I look at it, it's been up, say, 700%, so a 30% drop, if you got in at the beginning, is really nothing, a small price to pay, not that it would be like it.
Yeah, exactly. Yeah, that's part of it, too. You get enough of those over time to offset all your little losses and some of your big drops. And that's kind of the key is you're just trying to manage the risk. That's the only thing you can manage, by the way.
Right. I agree. I'm seeing the method to your madness, so to speak, which it's held me well. Well, the one strategy I was doing at the time that it was a momentum stock, I was selling naked puts against it. So obviously I was leveraging, I was going up, and if it should have, hit a rut, I wouldn't have been totally devastated. But I've been out of it for a little while. It's gotten a little too pricey for me, but it's fun to follow, though.
Yeah. Now, if you had been selling naked puts against optoelectronics, you'd be pretty. That wouldn't be really good right now.
Not today. Oh no, Lord, no. I thought it had peaked at 65 or 70 before, and it kept going to 100. I say, God, when's it going to stop?
Yeah.
It's been pretty exciting, though. Okay, thanks for your time, Bill.
Thanks for calling.
Yes, sir.
Bye-bye. And by the way, everybody else that's been listening that got confused by that conversation, don't worry about it. You shouldn't be doing that stuff. That's really complex. And Jerry's been around a long time. He does a lot more than most people do. He's a more sophisticated investor. But realistically, you don't have to do any of that stuff to reach your goals. That's what you do when it's a real hobby and it's something that you're really dedicated to. You can you can make this really complicated. You start talking about some of those strategies. It's not necessary. The stuff that's actually simple tends to work just as well, if not better, over time, particularly for somebody who doesn't want to spend a tremendous amount of time. That's the other thing. How much time are you really going to spend on this? If you're not going to be spending an enormous amount of time investing, you need to get the basics down really good, and you need to stick to that. And that's it. That's all you'll ever need for the rest of your life. Get the basics, get the fundamentals down. So if you want to know what those are, that's why we're doing the seminars, and we'll continue to do the seminars going forward. I like doing it. There's no cost to attend. Seating is limited, though. And you can go right to bullingtoncapital.com, click on seminars, sign up. And we're going to be, we won't be talking about selling naked puts. That's not going to happen. But we're going to talk about the basics, the 10-minute retirement plan, stock picking 101. We're going to be talking about today, anyway. I wanted to talk about how do you put money in your account that you're going to withdraw? How do you supplement your income? I can't tell you how many times I hear people saying, well, I just want to spend the dividends and the interest. Well, the dividends and the interest are typically not enough for most people to live on. And we'll talk about why that is right after these commercial messages. You're listening to Bill Bullington right here on 1420 The Answer. Stay tuned.
Sit around the house, get high and watch.
And we're back. So we're talking about taking money out of your investments to supplement your income during retirement. And this is also a topic that will spend a little time talking about it at the upcoming seminar. So, and I won't forget. But it's kind of tough. A lot of people are looking at, I just want to spend my dividends and I just want the interest income. That's a little bit difficult because the dividend yields are not that high. Now, and I think of my high dividend model, which is actually, it's an aggressive dividend model. They're only about 4.5% right now because share prices have gone up on those things, and the share price goes up, the dividend yield comes down. So, and that, people look at that and go, oh, that's great. Yeah, but that changes, by the month. So that's just what it is today. And if you wanted something that's fixed, that it doesn't really kind of exist right now. You look at the bond rates, right? Rates that you can get on government-backed securities or direct obligations of the government, and they're just not paying a whole lot. In fact, I'm going to try to pull this up really quickly. There we go. We go to markets, and shoot. Lovely. So Dow Jones Industrial, the Wall Street Journal changes their layout. It figures. Should have checked this before I got in here this morning. Anyway, 10-year treasuries, somewhere around 2.5% or so. That's not a lot. 2.5%. If you're going to pull out 5%, this is typically what we do. Is set up a with automatic withdrawal. I use some mortgage-backed securities, some short-term treasuries, things that aren't going to fluctuate a whole lot. And they're not going to generate a ton of income. Actually, the income on them is not fantastic. It's not 5 or 6%. But that's not what they're there for. They're there because they don't fluctuate like stocks do. See, when you're taking money out of an account, you want to take the money out of the thing that fluctuates the least, not the thing that fluctuates the most. And if you have 4 to 5 years worth of withdrawals in something that's not going to fluctuate a lot, which, in other words, some people would call that safer. I just call it, lower volatility. If you've got enough for 4 or 5 years, then the other stuff like your stocks, your mutual funds, exchange traded funds that invest in stocks, they have time to recover, and it gives them a long time to grow in case you get another big correction. And that's I think the smartest thing to be able to do. Smartest thing to be able to do is to set up enough money inside your shorter term, more guaranteed things, and then we're just going to pull from that each year. If you've had a great year, incidentally, in the stock market, if you've had a great year, you can take some of that money from stocks and put that over into that pool that you're going to use to fund your future retirement. Now, depending on how aggressive you are or how conservative you are, you could have half of your money there. Let's say I wanted to pull out 5% a year, and I'm going to invest for 10 years that way. So for 10 years, I'm going to make sure I have an income for 10 years. Well, 5% times 10% is 50%, basically half your money. How easy is that? I just put half of my money in something relatively safe that I'm going to withdraw on, and then my other money I can use stock funds, ETFs, or stock portfolios. And that gives you 10 years then to be able to make back or go through any corrections that might happen, and you don't have to worry about it. How simple is that? So I'll have a specific example of this at the upcoming workshop, the seminar. I'm going to show you a specific example of what I just talked about. You put guarantee your income over the next 10 years. And incidentally, again, if you've had a great year, if that 50% of the money that you have in stocks or stock-like investments, mutual funds, exchange-traded funds, and it's had a great year, go ahead and take some or if not all those gains and move it over to the safe side. So now you'll have 11, 12 years of withdrawals before you even have to think about touching the other side. That's pretty awesome, isn't it? Super simple too. So again, go to my website, Bullington Capital. You want to talk about this in person, we can do that. I can do it over the phone. We can have a meeting, person to person. I can show you some of the illustrations that we're talking about. You can come to the seminar. There's no cost to attend. By the way, the corporate college, what a nice place to host meetings. That place is it's laid out. You know, that's where the Kevin Costner in that Browns movie, I now forget what it was called. What? Pardon me? Yeah, Draft Day. Draft Day was filmed right next to the room that we use. His office, actually, I can show you. If you come there, I'll show you where the space was that they converted into his office there. I thought that was pretty cool. And it's a really nice facility, probably the best for hosting meetings or educational workshops in Northeast Ohio. I haven't found any place that's been quite as good as that. It's very comfortable, very relaxing. And incidentally, when you guys reach out to us, I need to let you know this. When somebody reaches out to us, we will reach back out, but we are not a pain. We will not hunt you down. We're not low pressure. We are no pressure. If you change your mind, that's fine. We just we're there to help, whatever we can do. So feel free again to give us a call on that. So we're just talking about keeping some money in short term. That's a really good way. That's probably one of the better ways of financing retirement, in my opinion. Going forward, it's a lot better than the annuity. The annuity, once you annuitize that and convert it into a monthly payment, most of them can't be converted back again. You can't get your money back. And a lot of them will actually take all the money when you pass away. So if there was any money left, then you're basically disinheriting a lot of your beneficiaries. Now, you can set them up with some companies to set up a systematic withdrawal. That's what they call it, a monthly distribution. And then it will, whatever's left when you do pass away can go to your beneficiaries. So you got to be really careful about that. Got to be really careful. Make sure you read those contracts, and those contracts are tough. I don't know if you've ever seen one of those, a prospectus on annuity. It is tough. We use an investment-only annuity at my firm, and it gives you the option of leaving the principal behind to your beneficiaries. But I got to take a real quick phone call. If you'd like to call us, 216-901-0945. I only have a few minutes left today, but I'm going to go right to the phones. And Bill, you're speaking to Bill.
Professor Boynton. I heard somebody else call you Professor. Yeah, You are.
I don't think I deserve that title, good or bad.
Yeah, well, you're a professor of what you do so well. Hey, you talk so much about how investing is so much of an emotional challenge.
Mm-hmm.
I have a little bit of investment in some silver, melt silver, not collectible coins.
Okay.
Under what scenarios might it again spike in price, as it has a couple of times in the past?
Well, silver is actually kind of a major component in a lot of batteries. And if you look at today's Wall Street Journal, you're going to see it's also used in a lot of microprocessors. It's got a lot of uses, industrial uses. And when you look at the cars, like pick up today's edition of the Wall Street Journal, look at how many people are planning to make either a purely electric or a hybrid electric car over the next few years. And everybody is jumping on that bandwagon. And so silver, the demand for silver can probably go up because of that. And that would be my guess, that you get something that happens on a industrial scale where silver is a major component that could drive the price up. But, having said that, that's kind of like trying to figure out when the Browns are going to be playing in the next Super Bowl. It's very difficult to do.
You started to make me feel better, but you just
Sorry. Well, maybe not as difficult, because silver is used a lot. There are a lot of electrical uses for it. Right now, there are a lot of competing metals that aren't quite as expensive, but they don't conduct electricity quite as well, don't have the same physical properties that silver does. And silver is used pretty heavily in a bunch of industrial. And you never know. Nobody ever knows what inventions are going to come out that are using that might drive the demand for it. But that's pretty much what it's going to be, because I'm pretty sure silver's peaked in the jewelry market. The demand for silver from jewelry is probably going to stay relatively, kind of the same. And you can remelt it and reuse it, but I think it's got to be an industrial application that comes along and and really increases the demand for it. Now, and when that does happen, by the way, you'll see a spike, but then they'll develop alternatives when the price goes way up and it gets too expensive. That's what happens. That's why I'm not a big fan of commodities. Because
I sure hope it happens before I need the money.
Yeah, me too. Yeah, I hear you. Yep. Yeah, commodities are tough, man. They're extremely hard. So.
Yeah.
But anyway,
so
hey.
Your basic age, you still like your basic
Yeah,
age?
man, that stuff is awesome, dude. We gotta get together. We gotta talk about that again. But anyway, why don't you give it out to your website?
Make a shameless plug for
Sure.
my website.
Yep, you got it.
People can buy it at nutriskis.com. Nutriskis.com, and there's a little tab that says Shop Now.
Okay, cool. All right, well, hey, I got about 20 seconds here. Thanks for calling.
Thanks for all you do, and we'll talk to you soon, buddy.
Okay.
Have a good weekend.
You too. Yep. And you can hear this show every Saturday morning, 11 to noon. It's also available on my website. If you miss it, you can also get it on Apple iTunes, which is kind of wild. So I like doing that too. And anyway, I'm glad that I got the chance to be here again today. Yeah, glad for every day, actually. And I hope you guys all have a good week. Good luck and good investing.
You just caught another episode of the Bullington Capital Report, broadcasting every Saturday morning at 11 a.m. on AM 1420 The Answer. If you have a question and would like to speak to Bill personally, you can call him at 330-664-0700. That's 330-664-0700. Or contact him through his website, bullingtoncapital.com. That's bullingtoncapital.com.
Past performance may not be indicative of future results. Therefore, no current or prospective client should assume that the future performance of any specific investment strategy, including the investments and/or investment strategies recommended and/or purchased by advisor, or product made reference to directly or indirectly will be profitable. Different types of investment involve varying degrees of risk, and there can be no assurance that any specific investment will either be suitable or profitable for a client's investment portfolio. No client or prospective client should assume that any information presented serves as the receipt of or substitute for personalized investment advice from the advisor or any other investment professional.
The preceding program has been paid for by Bullington Capital Management, LLC.
The preceding program's views, claims, or representations may not reflect those of AM 1420 The Answer or Salem Media Group.